Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. It's Monday. Markets are open. Markets are not doing too well today. Kind of looks like a little bit of a bloodbath going on. Dow's down about 600. NASDAQ, call it 250. So this is supposed to be the week that Santa Claus comes. I mean, Christmas is on Saturday. Well, it kind of looks like the bears have eaten Santa Claus. The bears are in control of this market. Now, do I think the market's going to go lower? Actually, I do. Now, but I got some good news. It's Christmas. I don't want to just be gloom and doom. I want to give you some good news. All right, so I watched the VIX a lot, and the VIX is what told me that this market was going to come down. And sure enough, it's coming down. But what's the VIX telling me now? Well, the VIX is spiking today. Okay, so it's spiking. It's up about 20% today. Now, anytime the VIX goes up by more than 10% in one day, well, there's about a 90% chance that we're going to have an update either tomorrow or the next day. And that would be either Tuesday or Wednesday should be an update. And that's good news. Now, will I be buying the market? I've got a little bit that I took my short positions off today, and I'm looking to, when it does jump back up, I'm looking to put my short positions back on. You see, I still think we got this downward drift going on. Now we're down, let's call it about, I don't know the exact figure, but let's call it 5% on the NASDAQ, 5% on the S&P 500. But I think we still have to get down to the 10% level. So we have a little correction, a normal correction, 10, 15% maybe. We're only down about 5%. So we do have to get another 5% down, and we might even go another 10% down. We might come down and touch the 200-day moving average on these. Now, we haven't touched the 200-day moving average all year, and that's very unusual, not normal. Normally, every year you come down, you touch the 200-day at least once. And now I do think we're going to bounce once we hit that 200-day. I believe we will bounce, and we might even bounce all the way up to new record highs. Now, I'm not completely sure of that, but I do think we'll bounce once we get down to that 200-day moving average. And it's going to take another week or two to play itself out to get down to that 200-day moving average. We're going to have some updates, and probably tomorrow or the next day will be an update. You know, that Santa Claus rally, it could still come. Maybe Santa Claus is just running a little behind schedule, but it really looks like the bears eat Santa Claus this year. This year, it just doesn't look like it's going to play out that way. The bears are in control of this market, and as long as the VIX stays above the 50-day moving average, the bears will keep control. Bad things will happen. Bad things to the S&P, bad things to the Qs, and bad things to the Dow, as long as the VIX stays above the 50-day moving average. And we just have a 20% spike today. Okay, but the VIX itself, if you look at the options, it's telling you we're going to move a little bit sideways for the next week or two. And that's very possible. That's very probable. So what I did today is I took my short positions off, and I'm hoping that we do get that bounce so I can put the short positions back on. Now, everybody out there, they're screaming, buy the dip, buy the dip. You go to mainstream media, hey, stocks are fair value now, buy the dip, and you're going to be off to the races. I'm not convinced of that. I'm not convinced of that. But that's what they're telling you, and this is just what I'm doing. You do your own research, and you do what you do. Now, what I do want to talk a little bit more today about is inflation. Now, everybody, thinks inflation's here. Well, it is here. It's just, when you go to the grocery store, things cost more. But this is actually, it's not really here yet. The inflation is still coming. This is just the start. And that's what's scary. That is bad news, because this is just the start of inflation. This is kind of like, well, I'd call it the good times. You see, here's why. Our dollar buys less in the grocery store, it buys less at the gas station, but compared to the other currencies around the world, our dollar is still strong. So when we import stuff from other countries, those products are still relatively cheap. But when 2022 comes, our dollar is going to break. It's going to crash against the other currencies. And that's where inflation is really just going to come like a tidal wave. It's not going to be pretty. Yeah, the government says, we got like the CPI up 6.8%, the wholesale PPI up 9.6, but I'm telling you, it's just the start. Look, and if the Federal Reserve doesn't want to fight this, and they're not fighting it, they say they're tapering. You can go to the Federal Reserve site, and they're not tapering. They're buying more and more. You see, when they say they're tapering, they're reducing the minimum amount that they can purchase. They can purchase to infinity, and if the stock market comes in, they're going to keep buying to infinity. Look, until they start to actually raise interest rates, they're talking about, talking about May and June. Look at the ball game could be over by May and June. We got this tidal wave of inflation that's going to hit in 2022, and this is really bad. It's really bad. It's bad for poor people. It's bad for the middle class. Look, if you're making $500,000 a year, you don't have a problem with this inflation because you can afford gas, you can afford groceries. But if you're not making that kind of money, this tidal wave of inflation is going to come. Our dollar's going to go down against other currencies around the world, making the imports more and more expensive. And we import everything. We don't make anything in the United States anymore. The only thing we do make is dollars, and that's what we send out. And we're going to need to send more and more of those out because the value of our dollars is going to go down. Look at there's these inflation bills. We passed the $1.7 trillion. They call that the infrastructure bill. It's actually about 10% infrastructure, 90% BS. But okay, they passed that one, but that's inflationary, right? We don't have the money. That's inflationary. Now they're talking about this one for, 1.75. It's the Build Back Broke bill, or Build Back Better. I get that confused, I don't know. If we had the money, I wouldn't be upset. I wouldn't be opposed to this. But this isn't more inflation. And this tidal wave is just coming, and it's just swooping down on us. Look there's a tidal wave of inflation coming. And this new bill, they're calling it $1.7 trillion. They're about, take or give. But here's how they're measuring that. Some of the things in that bill are 10-year programs, right? 10-year programs. But they only count the first year of expenditure in that $1.7 trillion bill. They count 1 year out of the 10 years. It's really a $4 or $5 trillion bill. Now they're having trouble getting that passed through Congress, and I hope that it doesn't get passed. I don't want them to spend any more money. I want them to raise interest rates. I want them to stop inflation. Look, Biden came in and said he's not going to tax people that make anything, below 400,000. Well, he's taxing the crap out of us. Look at this inflation. It's a tax. It's a theft of your money. Your money is dwindling, and the tidal wave is coming in 2022. Now let's get back to the stock market. Okay, so Santa Claus got eaten by the bears this year. Okay, that's possible, right? But, there's still a lot of, they say this is the new variant of the virus. The new variant's making this come down. It's not. It's inflation. It's not. This is the taper tantrum. Look inflation's here, and we're getting a taper tantrum. It's delayed a few days. The Fed meeting was last Wednesday. We're getting the taper tantrum a little bit late, but that's what it is. The market's afraid because they're starting to realize, well, heck, they're going to have to raise interest rates a lot, not just a quarter point. Not just a quarter point's not going to do anything, and they can do a quarter point 3 times it next year. It's not going to do anything. They're going to have to raise rates a lot to fight this inflation. And the stock market's starting to realize that and starting to throw this tantrum again. Look, we could bounce tomorrow. We could bounce on Wednesday. We have a 90% chance that one of those is going to be an update. And that's a chance to take some of the stuff off that you own. Look, if you're a long-term investor and you're in the markets, you're trying to get that extra 5%, maybe 10%, but you could lose 30, 40, 50, 60% of your money if this market comes down. And it's going to come down in 2022. I don't think this is where it's going to come down just yet. I think that's going to be out in summer, probably July, August timeframe. We're going to get a correction now, and we're probably going to go down to the 200-day moving average, and then we're probably going to bounce up off of that average. And we may get to that new high where you gain your 2 or 3%. But that's just greed. Don't hold out for the last drop. This market's changing. It's changing quick. Now, look, you got to do your own research here, but the research is all pointing. We had a 12-year bull run. I mean, that's the biggest in history. We're due for that bear market, and a bear market can wipe out 50% of this. This has been the longest bull market we've ever had in history. The longest. Well, guess what? The bear market's going to be the greatest bear market in history, and it's probably going to last a couple of years when it hits. But it's going to hit when it hits, it's going to hit fast, but it's going to take 2 years until it bottoms out, maybe around 60, 70, 80% off. Then you got a good buying opportunity if you're a long-term investor. If you're a short-term investor, heck, I love this market. This is trader's market. You can trade up, down. I mean, like I say, today I took my shorts off, waiting for the market to bounce so I can put them back on. This market has a downward drift to it. I believe that. Now get out there, do your own research. Have a great Monday. This is Christmas week. Let's have some fun, everybody, and I'll talk to you again real soon. Like it, thumbs up. Really like it? Hit that subscribe button. I'm Tall Mike. Bye-bye now.